firm's come a long way in the last 2 decades, really. My father had set up the firm just after the war, following specialization in London, broadly as a commercial firm with international clients, and we were moving in the direction of becoming a very specialized maritime law firm. And in the 80s, after changing government from an inward-looking socialist government to a more open economy, the government started a project to open up Malta's services industry. And originally it was a corporate trust kind of focus, but in the 90s, early 90s, there was a decision to open up to the financial services sector. And as a firm, we took a strategic decision to diversify our operations. And we set up a financial services department, which I headed because I used to deal with ship finance. It made a lot of sense, and therefore we set up the ship finance, the banking and financial services group in the firm in 1992. So as soon as the Investment Services Act was passed, based on the European directive, we started focusing on funds as well. And therefore the history of our firm in funds goes back to 1994, basically. Okay, you can divide the line again along the lines I've already mentioned, between 94 and 2004 and after. In the first period, there was a lot of domestic activity. The market hadn't had the experience of investment funds in the traditional sense. There were obviously the English unit trust offerers, and the Barclays used to have these products, and there were some English banks which did. But the local banks didn't have their own homegrown products. So between 94 and 2004, what we saw were the local banks coming into the market, and they managed to launch maybe 40 or 50 funds which raised a decent amount of capital. Particularly with joint ventures with foreign operators, usually from England or from Jersey. HSBC Bank took over Mid-Med Bank, which was the larger bank, which originally was Barclays, and HSBC then moved that strategy further. During that time, because the market was growing, there were tax incentives to invest in funds, and so what we saw were at the same time were a lot of international operators, again particularly from England, coming to Malta and listing their funds in Malta to get the tax benefit. And so we had approximately 50 local funds which were homegrown, and about 300 or 350 international funds, mainly from England, but they would be Cayman funds, or they would be Luxembourg funds, or possibly Swiss funds, which were secondary listed on the Malta Stock Exchange and were sold into the market. So that opened up an angle which allowed international fund managers to understand that Malta was a market, but for the domestic money. And that happened for the whole period. As we approached the European Union and we had to start eliminating tax incentives in order to bring about harmonized tax provisions, these incentives fell away, and that resulted in these secondary listings actually drying up, because funds fell under the rule of final withholding tax within the fund before a payout on a redemption. So by the time we reached the European Union, we had a tax regime which was no longer incentivizing the distribution of funds by international operators in Malta. So it went back to the sort of local domestic activity with some international activity using Malta as a springboard. After 2004, when we joined the European Union, there was this stability in terms of credibility and legal system and political status. We then saw an opening, which we didn't quite expect really, in terms of the use of Malta by international fund managers locating their funds in Malta, particularly professional investor funds which were regulated, because all funds in Malta were regulated. Malta has emerged out of the 1980s model where Malta was lambasted as an offshore centre into a European Union state which does not have that reputation anymore, and therefore instead of being lumped with countries in a rather arbitrary manner many times as an offshore tax haven, Malta is simply out of the radar on that level, and now we are more and more being compared to Luxembourg and Ireland, because the products or the services we are offering are really not incentivized on the basis of taxation or secrecy, or possibly ring fencing, which are the three elements which typically make up an offshore product, and are really Malta is really being offered, or is putting its offering based on substance within Malta as a location to do business. Well, unfortunately, in this world, the problem of one centre is usually the opportunity for another, what we are seeing now is a certain movement in terms of redomiciliation of companies from offshore centres to Malta, whether they are funds, whether they are managers, whether they are insurance managers, whether they are banks. So there's obviously a trend seeking a more credible level of regulation, even if I don't necessarily think there is, when you compare both, you might find that the rules are broadly the same, except that there are very, very strong perceptions in terms of what the situation is. And therefore today people accept the Malta system as one which is really substantive. In fact, in seminars you find people who are regulated as actually making the point that this is not just saying it, it is actually true. And the MFSA is well resourced, their officers are competent, and they do actually argue the point based on the rules which exist. And there's no tolerance in terms of what the basic principles are. There is a willingness to sit down and understand what the challenge is, and possibly be creative in a solution which doesn't hurt the principle. And I think we've shown that we are able to apply substance in an intelligent manner, which has been a big relief to many people who have come to Malta, because they found the chance to discuss the problem around the table within a very short time. And there are some who come and solution isn't available and they move on. But most of the cases tend to find an answer to the issue they put before the regulator. The regulator has cooperated with the industry to ensure that the legislation surrounding the environment is actually kept up to date. With the reduction of bureaucracy, the latest amendment, for instance, was relating to security on units issued by funds. Funds units are usually used as collateral. And under our law, if you pledged those units, you'd have to notify it to the company registry, which involves a certain amount of paperwork and time and bureaucracy. That has now been eliminated, and instead of a notice to the registry, a notice to the administrator, which can be electronic as well, works. So you adapt according to what you are seeing happening. What I see so strong about the Malta system is that it can cater for all forms of funds and operators, and it can allow them to adjust within the system from one stream into another. Now, as you're seeing funds moving from an unregulated form to a regulated form and then to a UCITS platform, the Malta system caters for the last two. So it's likely that Malta will appear attractive because it can receive the professional investor fund equivalent into the system without too much adjustment. I think what's so interesting about Malta is that it doesn't bar someone coming in with the less regulated offering or product, and enables it to move to the higher regulated product over time, within a short period or over the long term, to meet the changing trends. What it doesn't allow is the unregulated environment, which is a decision one takes before you come. In other words, you choose Malta because you want a regulated environment. Now, we're competing with countries where this has always been a feature, but they've reached very, very high levels of saturation.
Yeah.
So the difficulty of getting cost-effective support, the difficulty of accessing the regulator, the difficulty of discussing issues is obvious. And the advantage for Malta at the moment is that we still have the space to be able to provide immediate and personal support, if you want to put it.
Yeah.